Hey, everybody, and welcome to Realty Success Hub. It's a hub where we talk about all things real estate, and we've got a really interesting show today. We're going to talk about investing in real estate when we're dealing with an uncertain economy. So, leaning into recessionary times to win big in real estate. And I'm so excited to have some brilliant minds joining us today. First of all, I'd like to introduce Angela Brown. Angela, welcome to Realty Success.
Hey, thanks so much for having me today. I'm super excited that you have let me be on your show today. And I'm really eager to hear how the recessionary times are hitting the real estate industry, because I know they've hit the commercial and the residential cleaning industry pretty hard. And so I would love to discuss that along with your findings about what's happening in the market today and how we stay current on what's in today's tap, if you will.
Okay, great. And we also have joining us today Regina Brown. Regina, welcome.
Thank you so much for having me. I appreciate the invite.
Tell everybody a little bit about yourself.
So, I'm Regina Brown. I am here in San Antonio, Texas. I specialize in the luxury market. I absolutely love what I do. Happy to help anyone buy or sell luxury real estate. So, please reach out.
Great. Thanks, Regina. And also we have Aaron Brown.
Yes, I'm a realtor here out of San Antonio, Texas. Honored to be part of the business and so happy to be part of the show today. Thanks for having me.
So excited to have everybody. So, we hear a lot about the economy. You turn on the news, you hear so much about the economy and inflation and rising prices. And of course, that affects real estate and all aspects of life. What are things like in Texas? Are you guys feeling like it's a recession, Aaron?
Great question. I'm glad you asked. As far as the economy here in San Antonio, obviously rates are up. And because rates are up, we've got inflation up, we've got rates up. Because of the way the market is and how it's been the last couple of years, it's actually cheaper to buy a house today in today's market than it was even a year ago. And so even though the rates are a little bit higher, it's still a lot cheaper to come in and purchase a home. Homes right now are going about 95% of market value in terms of what's offered on the back end when buying a home, and there's a lot less competition. So I would say actually at this moment is a great time to purchase. Not the most exciting for sellers, as you may imagine, and definitely not what the outlook was a year ago where people are overbidding so much on homes. As far as how the economy feels in general, yeah, I think everybody's concerned about what's going on, globally in terms of economics and how that's affecting the markets across the nation, specifically in the commercial world. Um, Anything commercial right now, banks are basically not loaning on, and they're trying to refinance most commercial stuff at higher rates than they had otherwise. And so it's a pretty tough time in the commercial space at the moment. When it comes to residential, I would say we're right on the precipice of some big changes coming over the next 6 to 12 months. And then of course we just had that hike again in rates here, and so we're looking at a little bit higher rates than we've ever seen, at least for the past 25 years, something like that. So.
I got a quick question, because I know that when the pandemic hit and a lot of people started working from home, there was a lot of commercial property that became unused, if you will. And there were a lot of people that are like, hey, wait a second, we don't have to have an office. We don't have to pay to have people come in and, all the expenses that come along with having an office. Do you think that what we're seeing right now is maybe a trickle down effect from the pandemic that's kind of just had kind of a lag that now catching up? People are like, don't know that we really need the commercial space. And the bank's going, wait a second, we don't, we're not going to finance like we did before.
Definitely.
Well, I'm seeing in Charlotte, I work out of Charlotte, North Carolina, and the surrounding areas. We're a big banking community, and the banks were some of the first to pull back and have their employees work from home. They are now, in large part, having employees either work at the office or do some sort of a hybrid. But in our uptown sector, so much of that commercial space shut down because it was an entertainment district, and now it's being repurposed and reimagined. And a big initiative in our area is to create live, work, play spaces, and to rely more on public transportation, less on private car ownership. So things are being reimagined, and like Aaron said, I think we're going to see some significant changes in the way businesses approach real estate and so much and lending and so many other things in the next year or 2 years.
The cost of homes here are still so much better than a lot of places in the country. The clients that I just finished showing, they are from Washington State. And the cost of living is so much greater there that for them to fly down and view homes for the weekend still makes a lot of sense for them. So we still have a lot of people moving here on a regular basis.
And is that primarily in the luxury market, or is that just in the residential market?
It's kind of overall here in Texas. Texas is still, even though the recession is everywhere, the cost of living is still so much better here than most places, that we still have an influx of people coming. So
I know that there are a bunch of people that are friends of mine, people that I know that have made an exodus from California, for example, to Texas, and they've moved to Texas, like, hey, our new haven. Are you seeing a lot of that where people are relocating to Texas as kind of a midland area that's not so expensive as it is on both coasts?
Oh, absolutely. Absolutely. You can get a lot of house for the same money anywhere else here in Texas.
So that's probably a really good benefit for you, Regina, working in the luxury market, that when a recession hits, areas of the country that are already really at their threshold of cost of living, the Northeast and the West Coast, that
Absolutely.
benefits markets like yours.
For sure. Now, Texas is a safe place. It's a really great place to come during a recession, for sure.
And with that, are you seeing a lot of investors buying up investment properties?
Tons.
Yeah.
Tons. Because there's the need for rentals has skyrocketed as well, with the cost of everything going up. And so investors are coming in and purchasing a lot of homes at once and turning around and using them as rentals. So the market here it's not thriving in the same way it was before, but you have a lot more investors coming in than you did before, with the rates as high as they are. So pros and cons to every situation.
Right. And I think we talk about that a lot here, that real estate is so situational. And in the Charlotte, North Carolina area, in our real estate market, we have a lot of people coming from the Northeast and the West Coast, and we have a huge issue with affordable housing. So we're seeing some initiatives here to address that. And we had the same situation where some hedge funds would come in and they would buy multiple properties cash, make it really difficult for individual buyers, home occupant buyers, to buy those houses. So it's really great for investors, but it can make it really tough for individual homeowners and home buyers.
So I have to ask the question then, what do individual homeowners do in a situation where maybe they need to relocate but are not willing or can't afford the high interest rates, and they can't actually afford the move right now? Do you suggest renting? Do you suggest just sucking it up and eating the interest rates? Do you recommend refinancing in a couple of years? Like, what's the go-to solution?
I would recommend you get with a good local lender to the area and have them go over your finances and your rate options and see what's available to you, because every person's financial situation is different. And so it's imperative that you seek out a professional who can actually go through those numbers with you and find out. I mean, sometimes it is better to rent for a year, depending on your situation. And so getting with a local lender, they'll go through all of those details with you and explain what's best for your situation.
On a quick note, as far as that's concerned, one thing that we're getting a lot of, at least I am, is there's a lot of people coming out of the woodwork saying that they feel like they would be better off with a lease to own, or purchasing for sell by owner. And what they're unaware of is kind of the way those deals are structured. Typically, you're looking at 20 to 30% down at interest rates that exceed 10%, between 10 and 16%, depending on the homeowner. And a lot of people are saying, well, if I did it for sell by owner, I would get better rates. It's actually not the case. You get far worse rates, and it's actually not in your best interest. So just a little misnomer, that something to think about as people are moving to the area. It is best to go with the bank, even at a higher rate. And then, you can always refinance. And so if rates go down in a year or two, you could always refinance. And there are some other options as well, that you wouldn't even have to pay for a refinance. If you did a conventional loan, with a conventional loan, you can always recast the loan when the interest rates change, as long as you've exceeded 20%. And so even if you come with 5 or 10%, as soon as you get to that 20% mark, you can always recast and get a better interest rate. So that's what I would recommend for people seeking a place at this moment. The other alternative is just to lease. And a lot of people are in that situation, and that's okay too. Our market is bracing for a lot of rentals. And so basically everything that's under construction, there's a huge push for apartment complexes and things like that here in our area specifically, to accommodate that rental market up and coming. So
We have a builder in our area who is developing and building single family homes that are rent only. So it's an option for families to rent in desirable areas in a single family home situation, as opposed to apartment living. And so they get a lot of those benefits without having to put themselves in a position to buy. In a situation like that, it's a good opportunity for them to wait out the interest rates potentially. But it's all, if you wait out the interest rates, then the prices are going to go up. So home ownership, if it's an option for you, never a bad idea. It's an asset, and that's a little bit about what we're going to talk about today. Why investing in real estate is a great way to diversify your portfolio, whether you're just a homeowner never planning to rent your property or flip your property, or an investor who's looking to do it to grow their wealth.
We have
And
a
that's one of the
saying.
questions. Oh, go ahead.
We have a saying in real estate when the rates are high. The saying is, marry the house and date the rate. You can always refinance later, but the price of the home is only going to continue to increase. So, as Brooke was just saying, the rates will go down, but the prices of the home is going to go up. So, are you actually paying more, or are you saving to purchase now? So, you've got to take it all into account.
You need to put that on a mug. I would drink out of that mug every day. That's a good one.
Well, and that's a great concept, because I know that as a business owner, we're always looking for the best return on our investments. But when it comes to housing, there are a lot of factors to consider. And when you are relocating, you have moving costs, and then you have the cost of if there are any repairs on the home that are not included in the price of the home. It's going to be ongoing things like the air conditioning unit went out, or you need to have the pipes replaced, or whatever. I mean, there are always things in a home as a homeowner that you don't really factor in until you're in the middle of it. And you're like, whoa, I have repairs, So there are things like that. And then in high interest rates, I know that even during, I shouldn't bring it up, but during like presidential campaigns, there are people that are like, whoa, do we buy now, or should we wait to kind of see what happens? So how do you go about figuring out all of your costs and like what it's actually going to cost you, instead of just looking at the interest rate and the bottom line?
I would always recommend a cash to close worksheet. Any lender can provide one on any home. It's a matter of having the address and the taxes for the year. So any lender can do a cash to close. It lines out all of the
financial breakdown of every aspect of the transaction.
There you go.
Yeah, and if you're talking about the home maintenance cost, because that's one reason why a lot of people like to rent is because they don't have to worry about the home maintenance, the costs, and scheduling and arranging and all of that. And again, that really depends on the home, how old it is, if the systems are currently under warranty, how large the home is, and if you're going to do a lot of the maintenance things yourself as opposed to hiring somebody to do it. But at the end of the day, those maintenance costs are in large part offset about the growth in your equity, the tax benefits of home ownership. So yeah, it's no fun to have to replace an HVAC system or a roof, but you weigh that out over when you get transferred and you need to sell your house. You're not just walking away. You get to sell it and benefit from the equity that has grown since you've owned the home. So you weigh all those factors in.
So during recessionary times, is that typically a time when people are more conservative or people are more bold about their purchases?
It's a really
Depends on
good
how big
question.
those pockets are, doesn't it?
So for the average person, they hold off. And that's when investors swoop in and buy a lot of homes. There's a lot of real estate that happens during recessions, a lot. It's the differences in who is purchasing. So people are willing to sell for less. It's a really great time to buy. But most people watch a lot of news and they are full and flooded with fear. And so instead of investing in something that will only continue to appreciate, they're scared and they hold off. So most of your wealthiest people in the world became wealthy during recessions.
So they're like, yay, a recession.
Absolutely. It's what you do. You fold over and wither up and die, or you get a different mindset and you press forward and you thrive. So
well, it's like the stock market, buy low and sell high, right? Same thing with real estate.
absolutely.
So what kind of mindset do you need in order to survive a recession? If you are thinking about purchasing property and you come from a place of fear, what would you recommend for somebody to pivot their mindset to
I would get
see
with
this
my
as an
lender.
opportunity?
I would get with my lender immediately. You need to financially be responsible for sure. But when you get together with a lender, they're going to let you know where you stand and what your numbers look like and if it's financially a good decision for you or not. And if you're in a position to where you can invest in something that will absolutely make you money, why on earth would you not? So just living out of fear isn't going to resolve any issues. So make sure that it's an educated decision, but speak to a professional, trust a professional. That would be my advice.
Right. And in that vein, working with professional, real estate is local. And so if you're an investor in Charlotte, North Carolina, as opposed to San Antonio, Texas, your investment strategy might look different. As I said, we've got a real issue with affordable housing. So there's a great opportunity for folks to come in and create opportunities for Section 8 housing or government assisted housing, which is really solid investment for a lot of people because it's government backed. I think with Section 8, the occupant pays 30% and the rest of it's backed by the government. So there's not a whole lot of vacancies or unpaid rent in a situation like that. So a market where there's a need and there's somebody who can fill that need, that's where wealth grows. So just knowing that about an area, okay, what's the need here? And affordable housing is one of them. And so dealing with a realtor who understands the local market can help an investor. What helps anybody overcome fear is knowledge. So know the market that you're dealing in, whether it's real estate or, if you're going to invest in the stock market, you're going to want to work with a smart broker or financial planner.
Absolutely.
Well, and I think it becomes the same in the cleaning industry. And I'm speaking from the cleaning end where we typically do the move in, move out cleanings. But cleaning is one of those services that in a recessionary time, a lot of people will come from a place of fear and they're like, I can't really afford to have my house cleaned. Therefore, I'm going to have to clean it myself and I'm going to have to cut back on that service. And at the same time, there are more households than there have ever been before. And there are people that still need cleaning on all of their homes. And so instead of saying, oh, no, I'm going to go out of business because nobody's buying house cleaning, and I hear this a lot every day, nobody's buying house cleaning. Well, yes, they are. You might have to pivot your business a little bit, but there are a lot of people that don't offer premium services that are exclusive to a particular thing. For example, a garage cleaning, for example. You can go to a whole neighborhood and you can say, I do garage cleaning. People are like, oh, well, it's a recessionary time. We're getting rid of stuff. We're having a yard sale. This is a time we're cleaning out the garage. Let's hire somebody to come in and help us with that process. And so instead of going out of business altogether, we're finding that house cleaners are getting more creative than they've ever been before. And they're saying during this recession, let's us get creative and help you get what you need. And it might not be your traditional maid service where you're dusting all the picture frames in the house, but you're helping people gut out their attics or their storage units or their garages or things like that, that are going to help them through the either selling stuff on Etsy or eBay or yard sales or whatever, and helping people through the process in a different, slightly different way, but still then paying their own bills until, I don't know, people start hiring house cleaners again.
Well, Aaron, I know you've been in the business, what, 13 years, something like that. So real estate is a long game. And just like Angela, you've been in your industry for years and years. So if you're prepared to play the long game, you do have to learn to pivot. And the same as investing in real estate when you're dealing with recessionary times. Okay, so maybe now is not the time to fix and flip, but it's the time to invest in rental markets. And I'm going to hold on to these properties instead of selling them because the interest rates are high and people are renting more. So instead of fixing and flipping, I'm going to hold this as a rental property and play that long game. And I'm sure you've probably seen a lot of that in your, is it 13 years you've been in the business?
14.
14, yeah.
So, yeah. Absolutely. We're seeing that a lot. A lot of people are stacking homes, which means they're purchasing a home every 12 to 24 months, depending on the region. As long as it's not a VA loan, they're able to take that home, usually do a HELOC on it, and get another home, turn that primary residence into a rental. So it's a good way to stack homes, build some long-term investment.
What kind of credit score do you have to have in order to pull off a loan during recessionary times? Or does that not matter?
It's a great question. The reality is that there's a lot of play in the market right now. Lenders are getting more creative than they've ever been before in terms of helping people get loans that work to their advantage. Typically, if you run your own business and you're not claiming a lot to Uncle Sam on your business, then it's harder to get a loan because it's based usually on what you claim. And so bank statement loans, portfolio loans, business loans come into play at that point. I ran into this yesterday with a client where just a little more creative financing comes into play. And there's still a ton of options out there. Unlike 2008-9 recession, all of those holes in the market were basically closed up on the lending side. And so getting a loan is much, much harder today than it's ever been. There's a lot more due diligence that takes place so that doesn't happen again. And so is it easy to get a loan, and what does your credit score need to be? It can be. Most lenders can go as low as 580 credit score, but you'll pay a higher interest rate. And with each bracket that your credit rating and debt to income ratio is better, you'll get better rates. And so if you're over 740, which would be the ideal world, and your debt to income ratio is under 30%, ideally around 7%, you're going to get the best rates in the market. If you're anything over that, as far as your debt to income ratio, and your credit score, then you will pay a higher interest rate. But that doesn't mean you still shouldn't invest and you still shouldn't get a home. Historically, the prices of homes have continually risen, even in down markets. And here in Texas, for example, even in the 2008-2009 market, across the board in Texas, no homes actually lost value. And so we hear a lot of clients going, hey, we're going to go into this big recession, the housing market is going to dip, and we're going to be able to buy homes pennies on the dollar. There's no indication from any research that that will be the case. The market is completely different than it was in 2008. And what is driving inflation and rates has nothing to do directly with the housing market like it did in 2008. We're seeing different economic factors that are affecting those things. And so is it a good time to invest? Yes. Do you need a great credit score? Not necessarily. And is it better to pay a little higher rate today and still get a house than to go lease? 100%. Here in the greater Tri-City area, which includes Houston, Dallas, and San Antonio, the average rents went up $350 a month from last year on an average. And so if you're looking at leasing year over year, you're looking at an exponential increase in costs where mortgage rates hardly went up, as far as what people are paying out. Now, obviously, because the rate went up a little bit, yes, you pay more, but not in comparison to the leasing market. So I would recommend, if you can buy, try to buy, for sure.
And now my question is, if you're a first-time home buyer and you have not purchased before, is this a good time for a first-time home purchaser who has not experienced creative financing and they don't know how it all works? Is this the time to dip your feet in and get started?
Look at all these realtors' faces.
I would say more so than ever. Absolutely. If you're buying right now at, say, 8%, is it going to get better in a year or two? Most likely. From all projections in 2025, the rates should dip back down around 6%, and that's what they're projecting. So,
yeah. And like Regina said, what's your line, Regina?
Marry the house and date the rate.
That's right. So yeah, you can buy now, and the rates likely will go down, but the home price is likely going to go up. And then that's 2-3 years of you building equity in your home and benefiting from the tax deductions of home ownership. And also during those years while you're anticipating the interest rate to go down, your rent is going up. And you have nothing to show for that. So yeah, the opportunity, if it's there for you to buy, then buy. And I'm sure you all are seeing with your lenders, they're coming up with some really creative loan products for first-time home buyers to assist them. I don't know, Regina, if you're exclusively in the luxury market or if you do any work with first-time home buyers at entry-level home prices.
Once in a great while, but not primarily.
Yeah, there's some great products out there. I mean, the backbone of our economy is home ownership.
So during a time like this, do you have people that are wealthy, and I'll just say wealthy, meaning like they're stinking filthy rich? Are they buying modest homes and doing the house stacking like Aaron mentioned, or are they going out buying these exorbitant properties? Because I saw something online the other day. There's like one of these superstars, but like a $200 million home. And in the back of my head, I was like, okay, it doesn't look like a $200 million home. And maybe it's location. And I don't know, maybe they're bragging about how much they spent or whatever. But I'm thinking that's a whole lot of little tiny homes they could have purchased to expand their portfolio instead of buying like one big property.
Yeah, so I was with 2 investors this last week, and they were looking between 1 and 1.5 million for little investment properties. And so it just depends. They're stacking, but for them, what other people would look at maybe as a $200,000 property, and we're going to stack and fix and flip. They were looking at 1 to 1.5 properties to fix and flip.
Wow.
Or fix, flip, and hang on to, but just, we'll come in and use $300K and update the flooring and painting and, throw a little bit of money into it and turn around and, lease it out. Or, that was their stacking.
Well, and I love during a recession where they would consider keeping the market open and hiring independent contractors and, journeymen and people, keep them employed during this time of doing the renovations and that kind of thing. I think that's amazing.
Yeah, they bring their contractors with them, and we sit there and we go through the whole house. So
Wow.
at any price bracket, it's a great time for people to purchase. And what Erin was saying, to stack. If you're in a position to be able to do that, it's a really good time. So,
All right. Well, let's say that you're not. Let's say that your finances are not in that situation, and
normal person.
maybe you're not ready to go in and buy $1.2 million homes. But what do you do today to get yourself ready for, I don't want to say the next recession, but how to weather this storm and get through this time and get ready to buy a home? What are the steps you would take?
Brooke, I believe, had some really good information on working on your credit and getting your finances in order. And I mean, it's the cart before the horse. You've got to take care of all of that stuff. You can't just decide today I want to go buy a house if your finances aren't in order. And Brooke had a lot of really good information on that.
I love working with first time home buyers and helping them to get into the position to be able to buy a home. And having good credit is fundamental. Good credit's going to, even wealthy investors, I don't know the investors you were working with or talking about, Regina, if they're going to pay cash for these homes or if they're going to leverage them. But it's, if you can use somebody else's money and leverage somebody else's wealth, it's always a great idea. And you need a good, strong credit history to be able to do that. So that is putting the horse before the cart in that situation. You do need to make sure that you have good credit and align yourself with professionals in the industry, a good realtor who's going to guide you along that path to help you increase your credit score, put you in touch with a lender who's going to help you with those things, and get to know you and learn what your financial goals are, what your home ownership goals are. I had a call this week, couple looking to buy the home. One had good credit, one doesn't have good credit. They haven't met with the lender, so they have no idea how much home they can afford, but they wanted me to set them up on an MLS search to go and look at houses. No, I'm not going to go show you a $500,000 house when you can only afford a $300,000 house, because then your expectations are set, and anything I show you is going to fall short of what your expectations are. So no, the first thing we need to do is determine what position you are. Do we need to better your position? And then take it from there. So,
and oh my goodness, be honest with your realtors.
Mm-hmm.
They don't realize that we are there to help them. And so be brutally honest about your finances so we can help you. And not to interrupt you, Brooke, but to interject, I dealt with that today. A client flew in from out of town and, oh, we're a cash buyer and here's the situation. We need a quick 2-week close. So we build relationships with the realtors on this end, and we immediately start negotiating with them. And all right, it's a cash transaction and this is what we need. How would that work out for your seller? And we go through all of this. They see the house. Yes, it's perfect. This is exactly what we want. Wonderful. So we start talking about funds. Well, I'll go ahead and get my house on the market immediately. Excuse me? That's called a contingency.
Yeah.
The house is new on the market here. I know, but we were told it will sell really quickly. I said, so the cash that you are going to use is the cash from the sale of your home that's not on the market yet. So be brutally honest, be super upfront with your realtors so that we know how to best help you. It will save a lot of headache, and that way nobody's the bad guy. We can help with a really smooth transaction.
Absolutely.
So financing is really important.
Well, and the reason that I am passionate about working with first time home buyers and credit repairs, because I've been in that position, and I was in a position where I was divorced and realized that my credit score was in the 500s, and yikes, what do I do? So I figured out what to do. I spoke with smart people and they helped me figure out what to do, and I improved it. So, so many people have been in that same situation. It's nothing to keep hidden. Get
Especially
it out now.
after
Let's figure it out.
Especially after COVID, there was so many people's credit was really affected during COVID due to lack of jobs and work and not being able to go into the office, and sickness and deaths and all kinds of things.
Right.
And so people are understanding and lenient, and no one's here to judge, but we need to know what the situation is so we can help you and educate you and get you what you need as quickly and as efficiently as possible.
And I'm so glad you brought that up because both of you, thank you, Brooke, for sharing that, and then also Regina for reinforcing that. When I got married, my beacon score or my credit score was 528. And it wasn't because I was late on my payments. It was because I had taken ownership of a business that had 10 years of back employee withholding taxes. And the minute that I signed my name on the line, the IRS came after me and they confiscated everything that I had. And they sold everything we had business wise, all of our assets at an auction. And then they sued me for the difference. And so there I was left like, whoa, wait a second, what just happened? And my credit went down the drain immediately. And I had 2 cars that went into repossession like immediately. And I'd never been late on a payment in my life. And I was like, whoa, what just happened? So I remember when I met my husband, and it was one of the most embarrassing things I've ever been through. I needed a ride to my insurance company. And I didn't have a car because my car had been repossessed. And I was trying to get another car, but I couldn't get the insurance. And because there was a lien on my bank account, I couldn't write a check. So I had to go to an insurance company to pay cash for insurance for a vehicle so I could get into another vehicle.
Oh.
And we got to the insurance company and they said, because you don't have a check and you can't give it to us and you can't guarantee the money, you have to give us cash right now. It was like $500 and I didn't have it. And he said, don't worry, I'll front you the money. And he didn't even know me very well at the time. I was like, why would you front me the money, right? But what's really interesting about that is there are people that for whatever reason, they're going through some kind of a weird hardship or something weird has malfunctioned and they find themselves in an odd situation. And I remember saying to myself during that time, if I ever get out of this situation, I'm never coming back here. I'm never going to find myself in this situation again where I have to borrow a car, like get a ride over to the insurance company so I can borrow money from somebody to pay insurance just so that I can get into a car. Like how inconvenient is this for everyone, right? And my husband was gratefully specializes in finance and he was able to get me from a 528 score up to an 840 score, which is excellent. That's great.
It's super higher.
I couldn't have done that without his help. And I remember because I was like, wait a second, how did I get here? And I was really dumbfounded. I was very naive, but then asking like with humility, how did I get here? How do I not get here again? How do I get out of this mess? And then literally asking every time I wanted to finance something for my business, because I'm a business owner, how do I do this in my business? Can I afford this? And have him look at me honestly and say, you cannot afford that right now. Do not do that. And then I'm like, okay. But respecting his opinion enough, like Regina said, get with a really good lender that can help walk you through the scenarios of if you do this, here's the outcome. And I remember one time in business, not for a home, but for a business loan, I asked my husband, can I get this business loan at this rate? And he said, yes, you can, but right now you own your car. And so if you'll take your car down to the credit union, you can sell your car back to the credit union for what's called a title loan. And that will give you the working capital that you need right now to do what you want to do. At the time, it was like 1.9% interest instead of a conventional business loan that was like at 4.5% interest. And I was like, oh, I never thought of that. And that goes back to what Regina says. There is creative financing if they know what you have, what your assets are, and what you can negotiate. But and my husband knew because I owned the vehicle outright, that I could then make a title loan and then get payments on my car. And the payments on my car were like $130 a month or something, which was very affordable, unlike the business loan, which would have been a much higher interest rate, and my payments would have been much higher. So
interesting.
There are really interesting, creative financial ways, even when somebody is building their way out of a credit snafu, like I was. And like I said, it was no fault of my own. I mean, it was just my ignorance that I didn't know I was taking on 10 years of back employee withholding taxes. Who knows that, right? But to work my way out of that, and then he's like made me make some serious promises. Like we don't use credit cards unless you can pay the credit card off at the end of every month. if you have to use a credit card, make sure there's money in the bank to pay it off at the end of the month. And so then I had to ask myself this question: oh, I have a credit card with $5,000 credit limit on it, and then to tell myself that's not my money. I don't own that money. That money is not mine. That money belongs to the bank. I'm borrowing this money at a very high interest rate if I cannot pay it off at the end of the month. So
And that's a great lesson for real estate too. Don't buy a house you can't afford. Don't over leverage. That was a big reason for the 2008 housing crash and that and subprime loans. And that's a big indicator. I think right now Netflix is showing The Big Short, which was about the 2000. I was like, okay, maybe there's some uncertain feelings out there, but don't over leverage yourself. Regina, you say, I love that line, date the rate, marry the house. But it doesn't necessarily have to be your first marriage. You can upgrade the house at some point down the road. You don't have to buy your forever house as your first house. It can be a stepping stone, and look at that as a possibility to grow your wealth. You can buy a home that's not your forever home. You're going to have the big dream house later. Buy this home, and hopefully you can hold on to it as a rental property. And then down the road, then buy a bigger home when you're further along in your career. So yeah, just like you said with the credit cards, Angela, don't over leverage yourself there, and don't do it with your home either.
Well, I know when we purchased our home, one of the rules that my husband had, and this comes from his background in financing, one of his rules, just like the credit card rule, was he said, we don't pay PMI insurance. Like, our family doesn't pay PMI insurance. And so we either have to pay more for a down payment down so that we are in a different financial position. But he said, we're not gonna pay that and roll that into a 30-year loan. And I was like, oh, okay, I guess that makes sense. What kind of tips would you recommend somebody look at if they were going to try to weather not just this recessionary time, but the future ones that keep coming over the next 30 years of a loan? Because you'll notice that we have lots of ebbs and flows in the financial industry.
My advice would be that we get your husband on here to give some good advice.
I love that, Regina. That's awesome.
He sounds like a wise man. We could all learn from him.
Well, he's in finance, so right, so he knows all of this.
Yeah, well, I have learned a lot, but it's made me, and this is peculiar, but I'm kind of I don't know if you call me like a compulsive shopper. Like, I'm the person, like, if I'm walking out of the store and they have like all the little goodies as you're walking out, I'm like, oh, I got to have that goodie. And it's kind of like impulse buy. And he's really pulled me away from that, saying, no, we think and double think and triple think our purchases before we spend, because there's a method to the madness. If you're just going to hurry and purchase something on a whim, maybe it's not such a wise choice. And that's really kind of tethered me to the reality of, it's not that our money is a reflection of who we are, but it's a reflection of the choices that we make that we're then forced to live with. And so
good.
It's kind of made me just stop and think, oh, yeah, we want to buy a new house, but should we or shouldn't we? And before I just go, yes, let's do it, then I'm like, well, let's think this through 3 times.
Yeah, let's do some pros and cons. And I always tell people, don't put off what you really want for what you want right now. So,
that's wisdom.
Yes. Well, I've lived it and I've made that mistake. Like, okay, I want this house, but I want to live, I want to have this certain lifestyle. So instead of saving my money and getting my credit right and paying down debt and putting myself in a position where I can afford this home, instead I'm like, well, I can't afford that, so I'm going to buy the flashy car.
Mm-hmm.
And for everybody that looks different. But if you're trying to satisfy that need with something that's really not your long-term goal, it's probably not a good idea. But to answer your question, Angela, I think that everybody should have a goal of having at least 6 months emergency fund in the bank, so that you don't get behind on car payments and risk your credit score. You don't get behind on house payments and risk foreclosure. So
that brings up a good point that I get a lot, and that is, how much do I need for a down payment? What are closing costs? what should my credit score really be in order to purchase? And then, what should my debt to income ratio actually be in order for me to get a good rate? And so we run into those questions daily. And what I would recommend is, um, obviously, the better your credit score, the better rate you're going to get. You should have 3 to 6 months living expenses saved away for a rainy day. In an ideal world, your credit to
Your debt.
your debt to income ratio should be at least under 50 if possible. And that's
Under
tough.
50 or 30? What did you say?
50 is okay. 30 is ideal. 7% is what your best rates will be.
Okay.
So if you had a rotating credit line at 7%, you're going to be golden. But even at 50%, you'll still get a great rate. It's not going to be the best in the world, but it's better than having 90% debt to income ratio. And
When you talk about debt to income ratio, are you also talking about student loans, or what are you talking about there?
student loans play the least amount of role in a home loan compared to any other debt. So they'll put the least amount of emphasis on a student loan versus any other type of debt. So that's a little bit forgivable, but the big question and what most people think is, oh, I've got to have at least 20% down in order to purchase a home. I don't know where my credit is really. I know my debt to income ratio is high. I might need to lease for the next 4 or 5 years in order to get something. The best case scenario is get with a lender today and get on a plan to purchase. And it might be a lot sooner than you think, including there's down payment assistance programs right now. So even if you don't have 20% down, but you still want a conventional loan, you could get it at 3.5% at a higher interest rate. And at 20%, you could still drop your payment. So lots of options.
Is that like a second mortgage on the home to have an assisted plan like you mentioned?
It's a different loan type entirely. So what they do is they'll loan 80 to 85% of the home's value. The difference of that is what you're supposed to come up with for down payment and closing costs. Let's say you don't have the down payment and closing costs. Well, the lender will give you a loan at a higher interest rate, shorter amount of years on just that amount of money. So let's call it $20,000 over a 3-year period. They'll give you 2 loans basically, one for your house and one for that. Now you can still get into a home. You're putting less money down, but you can get into a home today.
And is that leveraged against the house itself, or is that leveraged against other assets you might have?
It depends on the loan type. They do have a loan that will eat up the difference of equity if there is equity in the home. But you have to have a good realtor to negotiate that equity so that you're getting a home at a lower value than the home is really worth. So again, it just depends on your situation and the loan type. It's so exciting, right? Lots of options.
It's so many questions because like I think the conversation is because we are in recessionary times. And I'm not to say there's a recession that's going to absolutely grind somebody to a halt on making a house purchase. But I think people are being more cautious now across the board. We're seeing inflation go up, and across the board, we're seeing people pull back on purchases. Like even in the car industry, people are not buying the fancy cars that they were purchasing and trading in every 2 years or 3 years. They're kind of holding on a little bit longer. And people that were making purchases like, sending their kids to college, they're like, why don't you take the summer off and let's see how things go? We're seeing a lot of conservatism going on right now where people are not pulling the ripcord as fast as they once did just because they are unsure. And I think it's really important to have these kinds of conversations so that we can kind of look at it from a different angle and say, no, you're still okay. It's not the end of the world. We've had ebbs and flows like this before, and we survived them. I know that in the cleaning industry, we'd never had a pandemic. So when the pandemic hit, we were like, whoa, it threw everybody off their game. And we're like, guess what? It threw the whole world off their game. And none of us had gone through a global pandemic before. It was the first time for all of us. So yeah, we all went upside down for a minute in our businesses. And then we were like, okay, well, we're going to survive. And then the good news coming off of that is if there was another pandemic, it will never be our first. And so I think we're all better equipped now. Like maybe we wouldn't rush to the store and we'd like sell out of toilet paper and stuff. Maybe we're better equipped now because we know there's an ebb and a flow to that. You know what I mean?
And the key is to learn those lessons and to pivot from them. Like in 2008, when the housing market crashed, I think a lot of investors learned their lesson, and a lot of homeowners too. Don't over leverage yourself. To investors, they learn to diversify. So where they really got burned in the housing market, then maybe they invested some more in the commercial market. And in the economy pivots too. What we're seeing a lot now in my market in Charlotte, a lot of people, because of the rates, they're not selling, and the market's cooled a little bit. And so they are spending money renovating their homes, and they're staying in the space that they are. So we're seeing that part of the economy increase, where the home improvement stores and contractors and building materials, they're seeing growth in their market when things change in the housing market. But then that's going to make their homes even more marketable a couple of years down the road when the rates drop. So it's all cyclical. And when we see a lot of these homeowners not selling, it just shifts in the market. And we're seeing, like I said, in our area, we're seeing affordable housing be an issue. So buyers are buying in the entry level rental, developing neighborhoods that are rental only. We're seeing programs that encourage investors to buy Section 8 housing. So we have to learn from those lessons, like the 2008 crash, the pandemic, and be smart and responsible and do our part to keep the economy growing.
That's great advice. Erin, what advice would you give to people that are maybe a little bit cautious during what seems like a scary time?
I run into this a lot. There's a lot of conservative people out there, and they move as slow as molasses. And they're waiting for the economy to crash. They're waiting for the perfect opportunity to invest. They're waiting for all the stars to align. I would say for those people to just sit on the sidelines and watch. You don't have enough risk tolerant to be in the market, and I would recommend that you stay out of it. It right now is the best time to purchase, and I promise you, you will pay more if you wait. And it doesn't matter what I say. The economists are saying it as well. And really conservative people are like, well, we know it's going to crash. We know that it's going to tank out. We know that I'll be able to buy homes pennies on the dollar. If that was the case, you would have already done it. You would have done it in the last recession. Mm-hmm. Are we moving into a recession? Absolutely. Will home prices keep going down? No, they won't. Home prices, they may level out, but they'll continue to rise. Land has always continued to rise. It's finite. There's only a certain amount of it. And people keep buying it. And there's more people every day. Land isn't going away. And so land will continue to raise in value. If you're conservative enough that you don't want to be in the market, don't be in the market. That's what I would say. Move out of my way and I'll help somebody that wants help. There's a lot of people right now that will make more money in the next 2 to 3 years than they will make the rest of their lifetime. We are in a buyer's market in Texas. If you want to purchase a property, you will get the best on a property right now. We have more negotiation room and there's more options available right now than there has been. Inventory has gone from a couple of months. We're sitting at almost 4.5, 5 months inventory right now. A normal market sits right around 6 months of inventory. So we're not quite back to a normal market, but we're as close to a normal market as we will probably see. And so
does that give a buyer more leverage?
With that, be conservative,
Does that give a buyer more leverage if they were to purchase now?
Much more so.
It's been a seller's market for a really long time. It's now a buyer's market, and it's shifted. They get concessions. It's definitely a good time for buyers, for sure.
Yeah, and fortune favors the bold, right? So Yeah, you can speculate, oh, the housing market's going to crash. I'm going to wait for that to invest. But I don't think we're going to see another 2008 because we did learn our lessons. And that wasn't economy driven. That was poor lending practices led to that. And I think there are just too many safeguards in place to let that sort of crash happen again. So sit around and wait for that. You're right, Aaron. That's not going to happen. So let's take advantage of the opportunities that we have now.
Absolutely.
Yeah. So if anybody wants to invest, I know 3 realtors who would be happy to help.
I just want to say one other thing real quick, and it has to do with 1031 exchanges. We're seeing a lot of that in our market right now.
Well,
for those of you that, I'm sorry, go ahead.
For those that are new to the 1031 exchanges, explain that real quick before you give us the hint.
Yeah, I was just going to say when it comes to 1031 exchanges, basically what that means is you've got equity in a property, you can pull it out, and instead of paying capital gains on it right now, you're going to roll it right back into another investment. That investment window is typically around 90 to 120 days. So it gives you 3 to 4 months to find an investment to roll that back into and roll it into a business investment, whether that's another property, et cetera. And we're seeing a lot of that in the market. I want to just put this into perspective for those of you out there that are considering it. When we're looking at homes right now in the market, because we are in a buyer's market, we're talking about putting offers in on 3, 4, 5 homes at a time and seeing what we get the best offer back. It's not that, oh, we have to find the perfect home and then we're going all in on it. No, we've got a lot of options. And I can write 5 offers today on 5 different homes for you today, and we can take the best offer with the best structure. And where we're offering on 4 or 5 homes at a time, we can structure these offers up that are highly in our favor to such a point that I want to get a no from all of those offers. If I get a yes on any of those offers, I haven't fought hard enough in my mind for you to get the best. And so what we're doing is we're coming in much under market value, asking for the world. And then when they come back and say, well, that doesn't really work for us, we get their bottom line right out of the gate. We're doing that across the spectrum. And so if you're trying to invest in something and you work with a good realtor, they're going to use everything at their disposal to make sure that you get the very, very best out of the market conditions. And on the flip side, when I'm representing the sellers and I get those offers, we play hardball because I want to get the most out of the home for the seller, obviously. But lots of fun options right now. You can't be scared to play, and you've got to just work with professionals that know the industry and can get the most out of your property on either side. That's what I would have to say on that.
It's good advice.
Yeah. So I think to wrap this up, real estate's always a good investment. There's programs out there for everybody. There's so many different kind of niches, commercial or residential or fix and flip or house hacking, stacking, all sorts of options out there. So find yourself a good realtor. Your realtor can help you with a lender. Find some good lenders, create those relationships, start working on a plan to grow your wealth through real estate and diversify some real estate, some stocks, but real estate, Regina said, and Aaron, I believe Aaron said too, they're not making any more of it. So it's a good thing to buy.
On that quick note, I just wanted to say that when it comes to active versus passive investing, active is where you're controlling the asset and you're managing it, for lack of a better term, and you're very heavily involved in the outcome of that and trying to make it work. There are options for passive investing that typically any REIT, real estate investment fund or trust out there, where you can donate or get involved as little as $10,000, $15,000 and start making passive income. So there's lots of options out there. If you want to invest in real estate, don't feel like you have to go it on your own or that you have to go buy your own property.
Right.
There's lots of vehicles out there to invest in that can start a passive income, and you can have, a certain percentage of so many doors, for example, like on apartment buildings, as an example. where you might be a 0.1% owner in an apartment building, but at least you're getting some passive income back. And that's going to give you a lot better return on investment than, say, a savings account or something. So,
And in
lots of
situations like
options.
that, yeah, and in situations like that, it's very often you have the opportunity to easily expand your ownership in that particular property. Somebody else wants out or they're moving on, and then you can get buy ownership of what they have into it. So gradually to grow your wealth over time.
Well,
And
an advantage of a REIT
increase.
is that REITs invest in a wide portfolio. So if something is failing over here, they've got properties making up for it, and so it's a pretty safe investment. Just do your research on the REIT, make sure it's a good one.
Yeah.
Grant Cardone offers some really good REITs.
Well, this has been great, and I hope that everybody out there starts to consider looking into investing in real estate if you're not already. And it's been wonderful talking with you guys and learning everything you have. I've got the greatest quote ever that I'm going to put on a coffee mug. Thank you for that, Regina. Marry the house, date the rate. I love it. I love it.
It's not my original.
I don't care. I'm giving you all credit for it. I'm giving you all the credit for it. So we'll go around and if everybody will tell our audience where they can find you. Angela?
I'm Ask Angela Brown on all of the social medias. I do specialize in training for house cleaners and maids, and we are the move-in, move-out end of the cleaning business for any real estate transaction.
I am Regina Brown, based in San Antonio, Texas. You can find me on all of the social medias at Regina B. Realty.
I am a realtor out of San Antonio, Texas, author of Pride and Property, and you can find me at Ask Aaron Brown on any of the social networks.
And I'm Brooke Bryant. I'm in the Charlotte, North Carolina area and surrounding areas. I'm the author of The Ultimate Guide for First-Time Home Buyers and would love to talk with you about putting you in a position to buy a home or get your credit on the right track. And that's it for us this week. We'll see everybody again next week. Have a great time.
Thank you
Appreciate
so
you guys.
much,
Thank you.
ladies.